So I bring you back to this, guys. Long-term Bitcoin holders have sold more than 400,000 Bitcoin over the last 30 days, representing almost 2% of the total supply. Bitcoin is in a material supply distribution phase, and the price is still holding above 100,000. Bitcoin is living through a liquidity strain in the banking reserve system of the current financial system, and it's still above 100,000. Bitcoin has lived through QT for years, the fastest rate hike ever, and now, just now, only just now, is the financial system starting to break? Is there starting to be serious strain? Is the Fed forced to having to print money?
Bitcoin just survived one of the harshest financial environments in recent history. Over 400,000 BTC were sold by long-term holders. The Federal Reserve drove interest rates above 4%, and liquidity drained out of the banking system, conditions that should have crushed a risk asset, yet Bitcoin stayed above $100,000. According to Jack Mallers, founder of Strike, that resilience comes from how Bitcoin's supply works. When bull markets attract new buyers, fresh supply can't be printed or manufactured. It can only come from existing holders converting part of their wealth into real-world assets. In Mallers' view, this isn't a sign of weakness, but Bitcoin's natural adoption curve first mined, then spread as early holders sell to new participants and the asset integrates deeper into the real economy. What stands out to Mallers is that even with heavy selling from long-term holders, hundreds of thousands of coins entering the market, Bitcoin has remained above $100,000. Historically, large realized selling has led to price collapses, but this time the market is absorbing enormous distribution without breaking. To him, that signals deep institutional demand and a more mature asset than in past cycles. He then pointed to an important financial backdrop. Despite the fastest rate hike cycle in U.S. history and interest rates above 4%, conditions that normally crush risk assets, Bitcoin rose from $17,000 to $100,000. Mallers says this was possible because the Treasury used the reverse repo facility like a liquidity reservoir, draining over $2 trillion of idle capital into the economy. Now that the reverse repo is nearly empty, he believes the cushion has been used up, and any future liquidity will require new money printing, another force that could continue benefiting Bitcoin. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
So Bitcoin goes up, it attracts new entrants. Those new entrants need supply. The supply doesn't come out of the ground because we can't get Bitcoin out of the ground. We can't get Bitcoin out of the factory. We can't get Bitcoin at the Federal Reserve. It comes out of the market, guys. It comes out of the hands of people like you and I. And these people, like, guys, I'm not going to point out where in the chart I got my empty closet house, but that's my story too. At a certain point in my life, I was like, man, I want a cool house. Now, should I have waited until Strike launched Strike Lending and borrowed and financed it that way instead of the way I did? Yeah, but I was young and whatever. Oops. Whatever. But the point is, I don't even really regret it. It's a beautiful place. My girlfriend and I have tons of memories there. It's very likely going to be the home that we, are going to be living in when we get married and have children initially. So I don't regret it. I traded in some of my newfound wealth for a utility asset that's provided me safety, memories, and a place to start a family. And that's all right, this rant is getting a little long, but that's all I literally think that's all that's happening. And the mere fact that Bitcoin remains above 100K during all of this realized selling is absolutely insane. I cannot begin to express how bullish this is. Look at every other time wealth from old Bitcoin holders was realized. It was a bear market. This goes to show you guys the amount of institutional demand, the amount of maturity that Bitcoin has as an asset class is absolutely insane. It's absolutely insane. So I'm just turning on a lamp here. It's getting a little dark where I'm at. There we go. So anyways, I know it feels grim. I know it feels bleak, especially for those of you that are new. I've been through it. I've been around the block. This contextualizes it. The reality is this is how Bitcoin gets adopted. Bitcoin's initially distributed through mining, but then it's further distributed through people exchanging Bitcoins for real-world utility assets. And people that have real-world utility assets need Bitcoin. And there's going to be a natural distribution mechanism over time. Okay? And then one of the reasons that you had the rates hike as fast as they did, and you had US rates, so the Fed had rates at over 4%, and Bitcoin went from 17K to 100K. Guys, rates are still extremely high in the United States. We've talked about on this show how the United States has some of the highest rates from any central bank, or the dollar, the Fed, again. Are they independent or are they not? Whatever, interchangeably. The Fed has some of the highest rates in the world, and Bitcoin's been bullish. It's almost 10x'd in that time period. How is that possible? Where's the dollar liquidity coming from? They're draining money out of vehicles like the reverse repo. And so what Janet Yellen did is, hey, I'll issue T-bills. And so if you're a money market fund, you don't have a bias on where you're getting your risk-free return. You just want the highest number. And so when the Treasury is giving you a slightly higher number than what you're getting at the Fed, then they're draining money out of this. And so you can see the deposits leak, but now it's empty. And the emptiness is very important because it's really a proxy for how much liquidity is there in the system, right? Janet Yellen needed to find a way to support the existing financial system. And she did it by using this reverse repo facility, draining over $2 trillion that was acted as a sponge for when all the printing was happening. She drained it all out and was able to puke it into the real world. But now it's gone, okay? So first let's start there. That's what the reverse repo is. And when people say, well, the reverse repo's empty, this is a huge deal. That's what they mean. It is a huge deal because the hack that the US government was using to give liquidity to the existing financial system without bringing rates down. So you needed high rates because you want to fight inflation, but the existing financial system needs liquidity or else it collapses. It's a giant stack of cards, of dominoes. It's going to fall apart. And so that is what happened. Bitcoin is absorbing record levels of OG selling and remaining above 100K. This asset is maturing. People are able to realize wealth creation and new entrants, Fidelity, BlackRock, large sovereigns, governments, institutions. We're still above 100K. We're still one of the best performing assets this year. And the chairman of the Fed is telling you the market is about to seize up. Our facilities that we've used to inject liquidity are empty. Funding rates are screaming mayday. We need to stop QT and start printing money. They're saying it in broad daylight.
Jack Mallers pointed out that long-term holders have sold more than 400,000 Bitcoin in the past month, almost 2% of the total supply, and yet the price has stayed above $100,000. To him, Bitcoin is in a major redistribution phase, with coins flowing from early holders into deep-pocketed institutions, and the market is absorbing it without breaking. Even with liquidity stress in the banking system, quantitative tightening, and the fastest rate hike cycle in U.S. history, Bitcoin hasn't collapsed. In fact, someone unloaded nearly $9 billion worth of Bitcoin in a single day, and the market barely reacted, proof, in his view, of how liquid and mature the asset has become. He went as far as promising that if Bitcoin doesn't explode in 2026, he'll come out publicly and admit he was wrong. Mallers believes this strength is exactly why Bitcoin is under attack from parts of the legacy financial system. If everyday people can outperform hedge funds and elite financial institutions just by saving in Bitcoin, the traditional system loses its power. But he also emphasized that Bitcoin can't be forced on anyone. It grows at its own pace, governed by math and physics, not persuasion or political approval. The network doesn't need global consensus to succeed. It spreads one individual, business, and government at a time, changing lives without needing permission from the system it threatens to replace. Let's get back to the interview.
So I bring you back to this, guys. Long-term Bitcoin holders have sold more than 400,000 Bitcoin over the last 30 days, representing almost 2% of the total supply. Bitcoin is in a material supply distribution phase, and the price is still holding above 100,000. Bitcoin is living through a liquidity strain in the banking reserve system of the current financial system, and it's still above 100,000. Bitcoin has lived through QT for years, the fastest rate hike ever, and now, just now, only just now, is the financial system starting to break? Is there starting to be serious strain? Is the Fed forced to having to print money? And people are going to look at me and say, oh, the cycle's over. We've already experienced the top. I don't know why you're bullish. Listen, I don't give a fuck about 4-year cycle. Oh, we're this many days from the halving. I don't care. That's not how I'm bullish. Sue me. And I'll tell you this. If Bitcoin doesn't have an explosive 2026, I'll come on here and be like, yo, I screwed up. I was wrong. And here's how and why. As far as I can tell, this is the most bullish setup ever. We're just chilling above 100K, facing max sell and distribution of capital into extremely deep-pocketed institutions. This is an extremely liquid and mature market. Someone offloaded $9 billion in a day and it didn't move? It's insane. How many assets in the world can do that? And the entire financial system is seizing up as the government shuts down. So riddle me this, guys. The Fed stops QT, they start some variation of QE, the government comes back on, and the $1 trillion in our checking account starts to pour into the real world. The Fed starts printing money. Powell has to leave. Trump appoints who he wants, and they start slashing rates 50 basis points at a time. And I'm supposed to be bearish? Nah, you got the wrong guy. I've never been more bullish than now. I know, I get it. Like, oh yeah, of course you said that. All right, well, the coolest thing about a free market is time will tell. Time will tell. There's a war against the internet because the internet is disrupting legacy media, okay? And then Bitcoin is disrupting Wall Street. There was a war from the Biden administration on Bitcoiners, on people like me, kicking me out of banks, harassing me with agencies like the IRS. A war because I've outperformed, and I don't say I in an egotistical way, we all, assuming you guys are saving in Bitcoin too, we've all outperformed everyone on Wall Street just by saving in Bitcoin. Bitcoin is disrupting all these fancy hedge funds. Oh, Ken Griffin's hedge fund had an 18% return because he's smarter and richer. And no, fuck you. I've had a 50% CAGR sitting in an empty closet looking like a 12-year-old. Disrupted. Boom. Goodbye. You're irrelevant. Nobody needs to understand your high frequency trade, beta, alpha, mega, fucking hedge fund strategy that's returning a little bit more than the S&P 500. Just crushed your performance by just owning Bitcoin. It's just how I feel about it. You can't rush Bitcoin on the world. You're fighting against the physical realities of the universe. And the coolest part about Bitcoin is we don't need the rest of the world to agree with us or align with us to make progress. Think about how much change, positive change we've given the world and how much positive change we've given each other just by adopting this thing. Like, guys, Bitcoin changed my life in 2013 as an 18-year-old, and the network was a fraction of the size it is today. Nodes on the network were a fraction of the size it is today. So Bitcoin changes the lives of every individual or business or government that adopts it. And so we also don't need everybody. We want everybody. We want the best for everybody. But one of the cool things about Bitcoin is we don't have to protest outside the Federal Reserve building and say, adopt the Bitcoin standard, adopt the Bitcoin standard. We can adopt it on our own individual merit and change our own lives one at a time.
All these forces point to a remarkable shift. Bitcoin is proving its durability not through hype, but through real-world stress tests. It has absorbed massive selling, operated through the fastest rate hikes in modern history, and stayed strong while liquidity thinned across the banking system. Supply continues to move from early adopters into large institutional hands, and the market barely flinches. Meanwhile, individuals quietly improve their financial position without needing permission from banks, governments, or legacy institutions. If this is how Bitcoin performs during the toughest conditions, the question isn't whether it can survive, it's how far it can grow once the tides turn in its favor. If Bitcoin held above $100,000 during liquidity stress and aggressive rate hikes, what happens when liquidity returns to the system? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.